But let's focus on the auto space. Mahindra and Mahindra, they reported higher February auto sales numbers, which were better than expected. Now, the SUV segment did lead the growth. The total tractor sales volumes, in fact, were up by close to around 18%. To understand the way ahead, we're joined by Mr. Hemant Sikka, the president of the farm equipment sector. Hi, Mr. Sikka. Good morning. Thanks a lot for joining in. Well, the agriculture sector has seen a turnaround, and the data of the last few months clearly indicate that. You have sustained growth of more than 15% for the third consecutive month. Can we expect an upward revision in the industry estimate for Q4, where you had indicated close to around 15% growth, and for FY25, which was earlier seen at around 6 to 7%?
You're right that the agriculture industry, especially the tractor industry, has been on a roll this year. We are very happy with the way the industry has grown. We are looking at a very strong Q4. As you know that February was a very good month for the industry. The industry grew by 13.6%. And at Mahindra, we have outperformed the industry significantly by growing 19%. So we have gained some good market share. We are expecting this momentum to continue into the Q4, and Q4 our guidance stays at 15%. And if this 15% happen, which we are very confident of making this happen, the industry will grow closer to 6.5% to 7% kind of number. So we maintain the same guidance. However, since we are gaining market share, our growth will be obviously better than the industry number.
Okay, so you're looking to grow better than industry. Do tell us about the latest market share trends, Mr. Sikka. As of December 24, I think it was just a little over 44%. Now we're talking in March. So where are you?
Yeah, so our YTD market share end of February is 43.6%, which is a gain of 1.7% over YTD last February.
Okay, all right. So, hoping to maintain those market share moves. Will you right now be in a position to give us some estimates for FY26, or is it still too early? Because obviously we're still waiting for the Met outlook for the monsoon season. But any estimates for FY26 in terms of growth?
It's early to comment on FY26 because we have to wait for some early indication of the monsoon. Usually we get our first estimates from the Australian Weather Bureau, which comes in by middle of April. And IMD also comes with this early forecast by end of April. So based on these two forecasts, we will be able to kind of give our first estimate or the outlook for the industry for FY26.
All right.
Okay, all right, Mr. Sikka. Well, we have recently seen the government announcing income tax relief in the budget, and even the RBI has announced that rate cut. Do you see the impact of this playing out too? Or the demand is majorly on the back of a good monsoon, healthy reservoir levels as well?
Yeah, so agriculture, say overall, we have seen a lot of buoyancy in our target segment. Clearly, there are various factors which are playing for it. First of all, the Kharif crop was very, very strong this year, and the monsoon was 108% of LPA, long period average. So if you get a good monsoon, obviously, then it helps the Kharif crop, and also the reservoir level is at a 10-year high level. So that helps the winter crop, which is the current crop, Rabi crop, which is going on currently. So if you get back-to-back good crops of Kharif and then Rabi, and the prices are holding up very good, we have seen that the terms of trade for farmers are favorable to farmers because their input inflation has gone down, but the prices are still steady. Also for Rabi crop, the government has also supported very nicely with increase in MSP for key crops. So overall, if you see back-to-back good crops, government support coming in terms of MSP being better, reservoir levels being good, inflation being favorable to the farmers. So I think all these factors are helping all the momentum that we are seeing build up in the tractor industry.
Got that. Sir, the agri-business, the tractor segment currently forms about 22 to 23% of your total revenue. Is there any medium to long-term target that you'd be able to sort of increase it to, say, a next level? What essentially is going to be the pace of growth in that business, and how will that increase as a pie of the overall business for Mahindra?
No, so there is no such target. We want both our large businesses of auto and farm to do very well. And we are very happy that both the businesses are firing on all cylinders, and both the business continue to do very well. We are very happy about where we are today.
You have two tractor manufacturing units in the US. So in that sense, you kind of sort of satisfy the criteria, make in America to that degree. Any impact, though, of the recent tariff announcements, pronouncements, threats, etc., on the business per se?
Not that we are aware of, absolutely. And you know that US is our second largest market outside of India, and we are very happy to share with you that we have on-ground plants in United States of America. We have two large tractor plants, one in Houston and one in Pontiac. So we do a lot of manufacturing of our tractors right out there in the US.
Okay, all right. Mr. Sikka, we will leave it on that note. Thank you very much for joining in, and good luck with all of those plans as we get set for the new fiscal year.